Okay. And we're live. All right. Well, thank you. This is our first time going live on LinkedIn using live stream, so bear with us if there are any technical challenges. We're working through it and kind of getting familiar with this platform here. But it looks like we are up and going. We are CDK Enterprises. So for those of you who are not familiar with us, we are a consulting firm, and we help multifamily developers reduce construction costs and build more efficiently. We've been around for over 20 years, and we worked with the largest home builders, multifamily hospitality developers. We've participated in over $2 billion now between also the residential industry of managing construction costs. Over 55 projects over the last decade that were focused on multifamily and hospitality. And really our specialty is just helping to figure out how can you build more efficiently, cost effectively. And a lot of what we do is really diving into the details and analysis of the construction market, all the things that make it up. A lot of our secret sauce comes from our founder and president, Dave Krozek, who's here today, and his background in building distribution, supply chains, really understanding the construction market. So thank you for those of you who are joining us today. We wanted to kick off with a topic about kind of the state of the industry right now, as you know, we're heavy into Q4 2024, and then what that's going to look like heading into 2025. So I will go ahead and kick it over to Dave. If you have questions as we're going through this, or you have things to add, we're looking for an interactive discussion. So please, we welcome all of those in the chat on whichever platform you might be joining with. Please go ahead and post those comments there.
Okay, thank you, Christy. I'm going to start out by talking about three variables that impact what we all need to deal with on a day-to-day basis within the residential construction environment. And the first I'd like to chat a little bit about is the current trend with lumber. You know, the lumber market's been somewhat stagnant over the last 6 to 8 months. Very, very little movement and extremely predictable. Unfortunately, over the last 4 to 6 weeks, there's been a fairly consistent strengthening of that market. And each week we've seen the market tick up fairly significantly, $10 to $20 a thousand, depending on the category of product. At present, the framing composite is $448 per thousand. So the composite is basically an average of the key framing items: lineal 2x4, 2x6, header material, studs, etc., and the various species nationally. That is up from $398 a thousand, or 12.5% over this 4 to 5 week period. So as you can see, that's a pretty sizable movement. Furthermore, it's up 20% over where it was this time last year. So we're seeing a definite strengthening in the market, which will have some impact on all projects. Another indicator that we typically look at as we're advising clients on whether it's a good time now to purchase or not. A lot of that depends on the timing of your project and at what point you plan to start framing that project. So I'll share with you currently what the futures market is currently trading at on the commodities exchange. January futures, which is only out another, 5 or 6 weeks, are trading at $597 a thousand. So that's a pretty sizable increase from where we are in today's cash market at $448,000. That would lead us to believe that the futures market and those speculators are expecting to see lumber to continue to increase in price on the short term. Looking a little bit further into March, which is the next contract date, it's $615 a thousand. So no reprieve short term over the next 4 months. And then, of course, the last contract available currently is May, and that's at $631. So what do you take from that? Fairly simple. Prices aren't more than likely aren't going to come down. If you're ready to start a project and you or your contractor hasn't committed for lumber, I'd recommend you do so. The futures market isn't a perfect indicator, but it's right more than it's wrong relative to the direction the market's going to head. So if you can wait, who knows what will happen come June, July, and August. So that kind of touches a little bit on the lumber market. The next item that affects us, and you all may have seen the report out of Fannie Mae that was released yesterday. And basically 30-year interest rates ticked up again. They are at 6.84%. Compared to last year, they're down, okay? Last year at this time, they were 7.29%. So we're actually about a half a point less than we were a year ago. The 15-year mortgage, 6.02. Last year, 6.67. So down like 2/3 of a percentage point. Overall trending down year over year, however, still at levels that are suppressing new construction activity. And you probably, again, have seen the housing start releases, or housing sales, I should say. And actually, there was some signs of optimism there, but primarily in the resale market. In October, home sales, both new and existing, totaled just under 4 million. And it was the first annualized gain. So they have a formula where they take the month and they annualize it for 12 months. It was the first annualized gain since mid-2021. So that's somewhat optimistic that there's some activity out there, which is good news. The bad news, it's not really in new construction at this point. That still remains a little bit weak. And I think the bottom line is there's not a big surplus right now in new construction, single family homes, which I realize this is about multifamily, but the activity in single family definitely drives the overall market relative to price volatility, lumber appreciation, and decline, as well as other products. So that's kind of a gist of where the market is on those items that none of us can really control. We just have to try to understand them and think how those factor into our decision making on whether or not to start new projects and where we go from here. I want to talk a little bit about pricing that we're seeing out there in the multifamily and hospitality sectors. And we really break it down into, large metropolitan markets, something like Phoenix or Salt Lake, and those tertiary markets, like Missoula, Montana, or Bozeman, Montana, as such. In the large markets, we're seeing definite signs that labor is starting to become more readily available. Subcontractors are looking for projects that have almost an immediate start. We're working with a client currently in the Phoenix market and started only working with them 60 days ago, and their plans are to break ground in January. And we're having no difficulty whatsoever finding subcontractors that are readily available and willing to get started that quickly. That's a far cry from where we were a year or two ago. You may get good bid response, 2-3 years ago, but the challenge was availability and when they could get to your project. So that's favorable for the larger markets. What we're also seeing is in those larger markets, subs want to know what it's going to take to land the projects. So that too is a far cry from where we were a couple of years ago, meaning if once we receive bids, if we're still evaluating, we're getting phone calls as to what's the status, when are you making a decision? So those are all very positive. Okay, now I shift to those smaller tertiary markets. We're very active in those markets as well. The problem and the challenge there, we're not seeing the same level of available capacity with subs, softening in pricing. And excuse me, I think the main reason is because those markets demand over the last few years has greatly exceeded the supply in both labor. I won't say so much material, but certainly with available labor. That even a softening of new construction, it's going to take a pretty sizable downturn before the labor reaches the type of flexibility that we're seeing in the larger markets. So that's a quick summary there. However, there are a couple of things that we've seen that have isolated some impacts in markets. If you're currently out there now bidding, we've had a couple of back-to-back hurricanes. It's been rough for several markets, primarily along the eastern seaboard, and as a result, seen labor forces actually pack up and head east because it's an opportunity for them to really profit. Higher prices are typically paid. It's as unfortunate as it is during these catastrophic events, just because the issue is to get things back, put back together, get whatever is needed in that market to start the rebuilding process. So that's had an effect. I won't say huge, but it's been noticeable in some markets because subs that we would totally reach out to may not all necessarily be available because they are out on the eastern seaboard. Make a couple of suggestions. Depending on what your role is, as a developer, you may not be the first point in initiating what I'm covering. More than likely, it's probably going to run through your general contractor. But I think these are all strategies and tactics that you should be aware of and be challenging your general contractor with. So let's start first with major markets. One of the things we've done here over the last 90 days on within those markets is the bid invitations have gone out, specifically stating there's a due date for the bid. I'll use an example and call it, November the 1st. But there's a caveat listed with it saying that there may be a series of bid extensions following the November bid due date if the overall project cost is not achieved through the original bid. And quite frankly, we've had to exercise that in those markets. Not a bad thing, just very different than how most general contractors and other bid. They'll have a bid due date, they try to close it, package it up, present to you as a developer what the cost of that project's going to be. And in this case, what we've seen, once that occurs, people realize they don't know where they necessarily fall in the formula or the roll-up of the total project cost. So there's a couple of strategies that we have used to also supplement what I'll call the rolling or extended bid due date. We've also put out equally to all subs and suppliers kind of a target price range. and said, if you can't be in this price range, and these aren't arbitrary, these are based historically on what we think the cost should be, what is a reasonable price to pay, et cetera. We'll still accept your bid, but it's likely you might not be awarded the project. So two things there: the rolling bid due date and target pricing. Both very effective because it helps weed, the target pricing helps weed out those that otherwise might spend a lot of time and end up being significantly above what makes your project work. Smaller markets, a little bit more challenging because of what I spoke about earlier. Most of the constraints fall because the subcontractor base is already, the requirement exceeds the capacity of the current subcontractor base, okay? So they're not as willing to reduce price, rebid, et cetera. So there's really two options. The first option, which isn't always effective, and typically we get pushback from the general contractor on this, and that is to say, hey, look, this project's not going to happen at the current rates. We're okay to support your labor rate. However, we may need to separate the material from your bid. And we work on actually negotiating and on behalf of the GC, and then they contract it, but negotiating the purchase of material separately. And that's not for every category. It would be for those categories that obviously show the biggest opportunity of savings. This can account for $1 million on a $25 or $30 million project with little to no risk. And there are always questions, there are always concerns, but I'll address those if you have those questions later. But I can tell you, knowing probably what will surface, none of them amount anywhere close to the savings amount that you'll realize by doing so. So that's option one. Option two, which is necessary in many cases as well, and that is you've got to obtain labor outside of the market. And, if I'm looking at, again, I'll use the markets in Montana. We've done a lot of work up in Montana. And, there's only so many framing contractors, subcontractors in the market. And they're busy because the market's relatively strong, or at least above what the capacity is for that current trade group. So you have two challenges. One, you're either going to pay a premium, but probably the biggest challenge is what is their availability. If price isn't your concern, which typically isn't true, but assuming it's not, they may not have availability immediately. And they're looking at, we can take on your project, but we're looking at September, October, November of 2025. So it really is to the general contractor's advantage to cast what we call a broader net, to go outside the market and identify categories based on the market dynamics that you can bring labor in from out of the current market competitively. And I'll give you an example in a moment. An example might be, let's stay with the framing contractor and let's stay with Montana. Typical cost for a Montana-based framing contractor for a multifamily project is probably $12 to $16 a square foot, way over the national average of about 10. So we would look, and have done this, by the way, we'd look to markets where they're below the national average. Texas is a good example. Framing contractors might be, $7 or $8 a square foot. And they are very interested in coming to Montana for $10 or $11 a square foot. Saves the developer $4 to $5 a square foot, increases the revenue potential and profit to the contractor out of Texas. However, he does have travel expenses and temporary relocation, housing, but it all pencils. And I would say that scope we've specifically deployed in 80% of the 20 projects we've done in Montana over the last 5 or 6 years, effectively reducing those costs. In a nutshell, I don't know what your costs are currently running as a developer, but I'll share with you the two most recent projects that we're currently working on. One is under construction presently. We just started framing the first building. It's relatively small. It's 2 buildings, 72 units. Total construction cost, vertical construction, meaning civil up. It's $14 million. That project's going to be built for $198 a square foot. And there is nothing cheap about the finishes of the project. It has a beautiful finish. It has a great exterior curb appeal, cabinets of a high quality. It's an SPC vinyl flooring, some 20 mil, granite countertops. Nothing about it did we achieve the $198 a square foot by reducing the client experience. Just the opposite. The finishes are as high end as you'll see in most multifamily projects. The difference was really doing some of the strategies we spoke about earlier, right? Between value engineering on plans and other items. But it gives you a sense. I don't know where you are today. We get phone calls all the time saying, hey, we're being quoted $250 a square foot, $275 a square foot. We can't make that work. What do you think? Where can we end up? And, it's going to vary to some degree by market, but I'll tell you, the project that we just recently under construction, it's in one of the toughest markets that we've been in. It's a small tertiary market. And we started well above that number. I think the GC's original bid was about $230 a square foot. So we ended up at $198. So that might help put in perspective a little bit about what I'm sharing with you today. It's not hypothetical. These are practices that have been put to use and the results they deliver.
If I could, just build on that for a moment. So we actually did a couple of months ago, we did a full training. It's about 45 minutes or so. And we walked through that particular case study of this 72 unit, exactly what we did from start to finish with that project to be able to achieve those cost reductions, and shared with you the strategies in case there are things that you can be implementing too. Some of which are, I'll say they're generic. And what I mean by that is just that they can be implemented into other projects very easily, where they're the overall strategies and the tactics that we cover of how do you do that, right? One is, as Dave was mentioning, searching for subs that are out of market. When does it make sense to bring them in? Doing things like separating material and labor costs. Others were very specific. So in that case study and that training, we actually went through a lot of the value engineering changes that we made, because the total cost reduction for that particular, that deal was actually dead in the spring. The developer came to us and he said, hey, the numbers don't work. The contractor's coming back over budget. We can't move forward with this. So unless we figure something out, we have to be at or below 14 million as our total budget. And so we actually ended up reducing the cost between all of the value engineering changes, as well as all the other strategies that were implemented. We ended up with a total of over $4.5 million. And that's a small project in a tertiary market, today's point, that it was reduced. So the total was reduced by about 26%, which is a pretty crazy number. Our average is typically around 15% that we've seen over the last decade of when we're involved in a project. But all this to say that if you're interested in those exact strategies, or you want to see those examples, we do have that available. So if you just contact us, and we can send you a link and you can watch the replay of that training. It's about 45 minutes. We'll go through all of the tactics. We can talk about some of the objections I think are we touch on in that as well. And then we also have put together a series where in just about 2 minutes a day, you can learn some of these strategies direct from Dave. It's a little video series and it comes through your email and it goes over all these different tactics. So things like separating material and labor. What are the common objections that come up around that? And then what can you do in order to still help implement those, overcome those objections that you might hear from your contractor, how to have those conversations, how to start thinking about some of these strategies in a bigger way, and how to best utilize the expertise that's on your team from the architect, the GC, the engineer, like understanding what their strengths are and what you can ask them and help take control of your budget. So if those are resources that you guys are interested in, then reach out to us. All of those are free. It's just education. And we'd be happy to share those with you.
Yeah, thanks, Christy. I think really the last subject that I wanted to touch on, it was in Christy's invitation, although I don't have a crystal ball for this one. And it's really, what's the inflation factor look like going into 2025? Who knows? Okay. We don't have a crystal ball, although I will say this, that throughout 2024, we haven't seen the type of price escalation that we saw in 2021, 2022, and kind of continuing even into 2023. So it's kind of flattened out for the most part. I think the only exception will be, we were talking about lumber. I don't know that that's so much, although it impacts inflation and pricing, that's a commodity. It fluctuates with supply and demand. But the bottom line is there are strategies to combat inflation, and they are really a combination of the things that I talked about today in the webinar that Christy talked about. And, you can either allow inflation to impact the viability and the returns on your project, or you could choose to take a stance against inflation and really subscribe to processes and procedures and tactics that your general contractor, your architect, whoever the case might be, might not have embraced in the past, but in doing so today can in fact get your pricing back down into $200 a square foot. There aren't too many multifamily developers I know right now that wouldn't jump at $200 a foot, just because they've been struggling with something much higher over the last few years. So that basically concludes really what I wanted to share with you all, to leave enough time for some comments. I see that there are some, which I'll have Christy read and we'll attempt to address. And if anybody has any other questions, Christy, can they raise their hand and chirp in, or does it have to be through the comment?
Yeah, so I think the way it works through here is you can post a comment. So if you have anything that you want, questions that have come up through this discussion, or you want to dive into, or maybe something you're seeing in your local market or your specific situation, this is your time. So feel free, drop those as a comment. If you do want, we can pull people up. So if people are interested in coming up and actually having a discussion or talking about it instead of just doing it in a comment, you could do that as well. Just post a comment saying, that you want to come on with us. And I should be able to pull you up, I think. Maybe that's not true, actually, now that I'm seeing it.
Well, let's start first.
As I mentioned earlier, this is our first time doing a live stream like this. So I participated in some of these through StreamYard, but this is our first time hosting. So we're learning, so bear with us. But yeah, I don't see many comments that have come through, mostly just hellos from various channels, people chiming in where they're from. But Dave, are you seeing on your end, do you see any questions?
No, actually, you're right. I just clicked on it and it's just people checking in saying they were on the call.
Yeah, saying hello, where they're from. So But yeah, if you do have questions, we'll hang around for a few more minutes here. As we're waiting to see if there are any coming in, I'll just share a little bit of housekeeping and what we're thinking. So we decided to do these lives because we thought it would be a great opportunity to connect. There's a lot of experience that we've gained in, in construction, in development, and we really only have in the past brought that directly to our clients. And it's something that we're trying to find the right platforms to be able to share more of this knowledge and expertise, because there's tremendous value in what we're delivering for our clients that I think can become much more widespread through the industry. So that's really the goal. These lives in the future, what we would like to do too is we'll pick special topics, but we also want it to be sort of an open discussion and a roundtable, and would love to be bringing on, developers and working live in terms of how can we help with whatever roadblocks you're hitting, or if it's construction costs with certain things, and have those discussions. So if that's something of interest to you in the future, reach out to us and we can get that scheduled and set up. Let's see. We do have a question coming in from Caleb. Caleb is saying, have you done material cost comparisons between wood frame construction versus cold form steel construction?
Yes, we have. This comes up typically every time the lumber market begins to run. Today's level, even though we've seen an uptick over the last 6 weeks at $448 a thousand, that's still not at a level that would make sense for cold form steel. You may recall, if you went back, right around the time of COVID, 2021, 2020, lumber got up, $8, $9, $1,000 per thousand, really ridiculous. The challenges in the analysis that you're asking for is the material is one issue, but the single biggest is the available labor pool. The labor cost, for whatever reason, it's just, I think, because it's a broad base of wood framers are out there and readily available. That they are significantly less in their labor cost than a individual that's looking to go ahead and frame with, cold form steel, metal studs. And typically, without too much, I'm going to just say this generally, the difference is almost double on a labor end of things. And steel hasn't exactly been inexpensive the last few years either. From a product category, it has seen a significant amount of price escalation over the last 3 or 4 years. And unlike lumber that has come back down because of supply and demand and the commodity market, steel hasn't really experienced that. So that price escalation has stayed and has just made it really not a viable option.
Yeah, good question. We'll give another minute or two here, see if there's any other questions that roll in, but I think we're getting to we're just past the top of the hour here. And our plan is to start going live at the same day and time each week. So that would be Fridays at 9:30 Pacific, 12:30 Eastern. We are not going to do it next week in the holiday. And it might be slightly sporadic through, as we approach Christmas and New Year's and everything. But going forward, especially through 2025, you can start finding us at this date and time. And like I said before, we would love to make this a little more interactive. So if, even if it's value engineering and evaluating, I'm kind of saying this, I'm sure, Dave, you wouldn't have any objection to this because you've done it before. But if someone has like a site plan, or if they have plans that they wanted to share in advance, we could even do that live, right? Where we're reviewing and like talking about what could make it more cost effective or things to be thinking about, and sort of creating more of a, I don't know if workshop is the right word, but like I feel like there's a lot of knowledge people can gain in watching that live, even if it's not your project and your design, because you can start to think about, even from the very early, concept stage, there's a lot of ways that you can take control of the budget from day one. And we don't see that happen as often as we would like to. A lot of the times these projects are in development for years, and then you're a little surprised when it's getting close to actually finally bringing it to reality and the costs aren't where you thought they were going to be. So that's a lot of like where the heart of our mission is really helping people to understand along the way and from very early on how you control the costs, what are the different strategies, how can you be thinking about this, and how can you, as especially as a developer, you're the one in control of all of the experts around you, right? And like, how do you best manage that to keep everyone aligned and on target with the budgets that make sense for you? So thank you.
And really, just to add to what Christy said, yes, we'd be more than willing to address specific issues you may have. My only comment would be, don't send a 300-page plan set. Choose a challenge that you're having and try to have it to us. I'd say Wednesday would be perfect, Thursday at the latest, if we're going to address it on that Friday call, just so I have time to look at it. I'm not doing it cold during the live stream. Depending on what it is, I mean, questions and things, no problem. But if it's going to take a review of some detail, which I'm happy to do, just get it to us in advance and have it be something that, obviously can benefit you.
Yeah. If you do want to send a 300-page, you can do it with a budget and do it through our cost assessment. There's a form on our website, which is www.cdkinc.com, and that's cdkinc.com. But we do offer a complimentary, high-level overview of looking at where your current budget is, detailed budget, what each of the trades are, taking a look at, your plans and what it is that you want to build, and then giving you at a high level where the opportunities are to reduce your costs. So we'll go in and we'll say like, oh, wow, like you have a huge opportunity in framing and in lumber based on what we're seeing with these numbers and what you're trying to build. And we'll give you an estimate of what that would look like to be able to reduce those. So that is something that we do offer. So if you're looking for that level of service, then you can go over to our website for that. But with that, we will go ahead and wrap up. Thank you everyone for joining, and we'll see you back here in a couple of weeks, and enjoy your holiday if you're celebrating next week.
Take care and thank you.